Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury, and in this video I'd like to talk to you about the Tesla stock, which since Monday has been absolutely ripping. As you can recall from the last video that we did on Sunday night, we talked about how Tesla would fill in the wedge and we would see some price action in the 440 as the high. And then the S&P news came out and it absolutely took the stock to whole new levels. I mean, it was exciting to see. Hopefully you guys caught some of that momentum. Just real quick, I am wearing my Warriors hat today, as you guys probably heard. If you haven't already, if you're a basketball fan, is my main man, Klay Thompson, might have an Achilles injury, which destroys our season for the year. But, you know, let's just wish him the best, show him some love and support. Never like to see any good all-stars go down. So the reason why I wanted to also make this video, besides talking about the price action, is I wanted to talk to you about some of the trades that I took along the way, and I actually did actually make a pretty big mistake, and I wanted to share what what we say is a trend is your friend. And I basically didn't follow some of my risk management plans. So here's a 15-minute chart. And on Monday, we just had a solid day of trading. Let's see, we had sort of this gap up with the S&P news on the after hours, and that was huge. And then we had this gap down. And so a lot of times when you have a gap down and you're looking to short a stock, what you really want to look at is sort of the pre-market highs, which in this case was around the 465. And so when we had this massive sell-off, I actually ended up dip buying Tesla. You know, obviously we thought it would be a great buy, and we were obviously clearly oversold, and we had our wedge actually is acting as support, and then we sold down even more, down to like around the 431 range. So it was a good buy to come in and just sort of close the day, you know, up a few points. And what I ended up doing was a covered call. So a covered call, for you guys who don't do options, is you could own shares and then buy or sell a call option for someone out there to possibly exercise that option at a fixed price. So for example, if you think I sold a call option at 440 thinking that Tesla may come back down and sort of fill in this gap, and in that case is you can sell the call at 440 and then buy it back, either buy it back or you can just let it expire and keep the premium. So it's a good way to get passive income on shares that you own, and you still own the 100 shares of Tesla. Now, if Tesla hits 450 and the contract is exercised, you miss out on that. Let's say if you bought it at 440, you missed out on that $10 of profit on those 100 shares. So let's say that's $1,000, but you still get to keep the premium. So it's really just a way to secure some profits, and really, I thought it's just a good strategy for anyone who wants to minimize the risk. So then yesterday at pre-market, on Tuesday, we had a pre-market high here, and it was about 4 o'clock in the morning of about 456. And so if you're going to go for a long and you're not sure really what to do, you could, you could risk and try to dip buy, which I wouldn't recommend. What you're looking for is the break of that pre-market high, which happened here at 7 o'clock, which is 10 a.m. Eastern time. And so when you had this break, we had this sort of sideways action. And so what I did is I ended up sort of covering my call, buying it back, thinking that there was a bigger move and holding on to my shares. And then what I ended up doing was actually selling it around the 461 range, which, if you remember, was the pre-market resistance back here on Monday. So if you go back to Monday, and you see here, we have this sort of 460, 462-ish range. And so I sold my shares thinking that resistance was going to fail the stock again. And this is where I made sort of a major mistake. And that's really the purpose of this video, is I wanted to share, because as traders, we all make mistakes. And if we don't share that or we don't learn from them, then we're never going to become better. And going back to the trend is your friend, clearly when we broke this and we had this upwards momentum, guys, the 460, when it broke and it went up to 480, this was what we call a short squeeze. This is no more than a short squeeze. It squeezed a lot of people out, because not only did we break the pre-market highs, but we went all the way up to 480, and it was a major move. It was a $20 move in less than 30 minutes. It was just so fast. And so what I ended up doing when we had just broken the pre-market highs, I ended up trying to reverse the trend, which was the sort of a major mistake on my part, which was I started adding a short position. And one of the takeaways that I want to share in this video was there's nothing wrong with going opposite of the trend. Sometimes you think that it's going to hit that upper resistance and it's going to fail, and instead it just, all this momentum came in and it just started ripping. But what is your risk management plan when it doesn't go your way? You can always re-enter a trade. If you're a day trader, you can always come back in. And instead, what I found myself doing was it failed, and I ended up adding to my position as it was going up. But in addition, I was only down, I'd say like half a point on my position at one point, and it just turned around and went up 2 points instantly and just started squeezing. So as it's squeezing, what does that mean? It means all the shorts are essentially buying up the stock, and it's going up and up and up. And then we hit a little consolidation, and I'm thinking, okay, it's going to fail. And then we ended up pushing up even higher, and we never failed. And you can see with this fast moving SMA line, it was basically upwards the whole time. And then even today, thinking that we were going to sort of trend downward, and everyone knows that the shorts are stuck, right? There's a lot of people shorting down here, maybe some shorting here, and all we're doing is what? Today in the pre-market, we hit a low, we were trading below the line, and then all of a sudden at 4 a.m. again, we had the retail people coming in, we had all the major indexes who were buying up this fund, pushing up the stock, and guess what? We hit all new highs today. So with that said, you know, you could have kept adding to your position, but what you would have found is you would have just got squeezed out. And thinking about a half a point, a 1 point, a 2 point loss, and turning that into a 20, 30, 40 point loss, not having a risk management plan, that is the result of poor risk management. And so some of that, you know, I ended up covering earlier today, even though I could have minimized my risk yesterday, and not realizing that we're clearly squeezing, we're clearly going in an upwards direction and trying to fight the trend, which again wasn't a smart idea on my part. So I wanted to share that with you guys. Again, we're making all new highs today. This stock is just absolutely ripping on the news, and it's not going to start trading on the S&P till later December. I personally am very surprised about that we traded as high and making new highs and over 500 this fast, this soon. You can see we're way bullish, way off the Bollinger Band on the upper band, which is here. And that's why, like I said, I didn't expect this type of a move this quick. So with that said, guys, I hope that's helpful. Again, come up with your risk management plan. Where's your exit going to be if the trade doesn't go your way? Easily minimize risk. You lose 1, 2 points, whatever your risk plan is, as opposed to just letting it stay open and just hoping and praying that it goes your way. Okay, guys, so I hope that video is helpful. Please add any comments or questions. If you like this video, please hit the like button, share it with any of your friends and family. And like I said, Tesla to the moon. All right, guys, have a good one. Take care. Bye-bye.